So there are three main ways to minimize the taxes: shifting income, shifting profits to other entities. These are the tax rates in Australia right now for individuals and companies and SMSFs. The trust doesn't pay any taxes. The trust acts like a pipe that distributes profit to elsewhere. And you would need something like this to be able to assist with minimizing your taxes. Second way of minimizing your taxes is actually reducing your income. So what you could do is look over all the work that you're planning to start, and maybe it might not be a good idea to start it in June. Could be a good idea to start in July, because waiting those 1 or 2 weeks and starting it in July and actually not invoicing for it and not actually starting the job or whatever, that means that income actually falls in the next financial year in 2026. And when you lodge your tax return in 2026, that's after 30 June 2026. That's another year where you need to pay that taxes. What you're actually doing is just delaying your income and letting it get reported into the next financial year. And the last method is it's increasing expenses. By increasing expenses, you get tax deductions. Resulting to getting tax deductions, you will get your profit down. So decrease in profit, therefore you pay less taxes as well. So increasing expenses is another thing where it also is detrimental to your profit, because as a result, you make less profit, less money in your pocket. However, there's something called prepayments in the tax rules where you can actually pay any prepayment up to 12 months and still claim it in the financial year. So as small businesses, you can actually pay something that you don't expect to pay like right now, but you're going to be utilizing it next year. You can still claim it in the 2025 financial year or the current financial year. For example, insurances is one of them. Travel is another. It could be some things that you didn't expect to pay, but you thought, oh, I can get a loan for it, I can buy it. And as a result, those investments or the car or asset that you purchase helps you get a tax deduction, but also helps you increase your income as well. So in the next year, you might have to make more profit, but you also get to claim a tax deduction against it.